Risk assets continue to experience significant volatility at the moment, and of course, crypto is no different. Let's explore that a little more with Ian Lowe from Dacxi. Ian, very good to catch up with you. We haven't spoken for a while, so I'm interested to get your view of what's going on there at the moment. Of course, macro very much driving what's going on more broadly with risk assets at the moment. And as I said there, well, Bitcoin and the broader market having come off more than 6% over the past 7 days, but still trading within a range.
Yeah, hi Andrew. Good to talk to you again. Look, we've seen crypto markets sort of trade within that range as you describe it, slightly above or below the $20,000 US mark for Bitcoin specifically. But the market's traded within that range really since mid-July. And remembering the 3 months leading up to mid-July, we went through that very significant revaluation of crypto assets. Essentially, it came off about 50% from its range prior to that. And since then, since mid-June, it's really been in that range, slightly above or below 20,000 in the case of Bitcoin specifically. So what's been interesting is that the period really over the last 18 months, I think most commentators have said, look, we're seeing the correlation between crypto markets and other well-established asset classes. Equities are a very good example. We've seen the correlation between those continue to increase. And then, of course, more recently, we've gone into this almost a holding pattern in crypto market. What's been interesting as it relates to crypto and the correlation with other asset classes over that period since June is that we've seen increased volatility in other asset classes while crypto is sort of held within the range. So the obvious question that the markets are now asking is, what does this mean for crypto in the immediate and medium-term future, given we're seeing this well-established trend towards greater correlation actually start to become quite a different correlation again as other asset classes become more volatile and crypto holds in that range. I think what exacerbates the question or underlines the reason why people would ask that question is that higher risk asset, as you know, would typically become more volatile more quickly as the macro environment changes, macroeconomic change. We're seeing that in a whole range of areas, interest rates and inflation and the threat of market downturns around the world. So I think what all of that means is the market generally is expecting to see some volatility return to crypto markets in a way that we haven't probably seen over the last 3 or 4 months. There are those that are bullish about that and expect to see price improvements, and there are those that say, well, clearly we're in a very challenging period, and why would crypto be any different?
But nonetheless, I mean, if you're seeing volatility, clearly that is a trading opportunity.
Absolutely, completely. And so the trading community sees it very much as that. Our view is that, look, picking the volatility and the timing of that volatility, the quantum of that volatility over time in crypto markets remains extremely challenging. The fact that we've stayed in this channel while other asset classes have become significantly more volatile in recent months is a great example of not being able to pick it. But certainly, our view remains, stick with the major cryptocurrencies as an everyday investor, understand their use case and their sustainable value proposition, and then take a position that's about really sort of a vote for the future of blockchain technology more generally, and the infrastructure and other coins that really are entrenched in the future adoption and value of blockchain, and playing around in the long tail and trying to pick the market is really a very, very challenging proposition, even for those that are very experienced at it. So we think there's a lot of downside risk in the long tail, particularly as volatility is likely to increase.
Yeah, I was just looking at some analysis from Bitfinex pointing out that a lot of coins have been removed from those centralized exchanges and then put into storage. What is that an indication to you?
Well, a lot of exchanges are finding, just the sheer volume of coins that they've previously supported increasingly unsustainable. I mean, they just don't have enough liquidity in them for them to be able to generate fees from those long tail coins in a way that makes them viable longer term. So that consolidation is part of the shakeout that is the process we're going through now. We're also seeing a consolidation, not just of the coins that are supported on exchanges, but of exchanges themselves. Some of them are disappearing because they're just no longer viable from that liquidity perspective. But others are being acquired in a roll-up that really is only just beginning. So that sort of consolidation is fundamentally healthy for crypto markets, and it's only going to continue.
Well, as we see consolidation perhaps, and as we've been talking about Bitcoin and the like trading in those ranges, meanwhile in the background we're seeing regulation still being formed. You could argue that we're still a long way off having greater certainty in that space. What are you seeing in Australia at the moment, of course, with the new government? Well, it's obviously been in power for around 6 months now, having announced recently that it will embark on a coin mapping exercise. Is that worthwhile to you?
Yeah, so, well, look, the short answer is I think it's a really positive development. But to put that in context, the coalition government had a pretty, certainly well-published agenda around digital assets and the move towards more complete oversight of the industry generally. And the new government's come in and said, well, look, we're really just going to continue with, in that direction with that agenda. One of the things that they're obviously keen to do is to show that they're also doing things slightly differently. And so they recently announced that they would undertake what is essentially an audit of all of the different types of tokenized assets or digital assets that exist, in order to essentially classify them into groups. And the reason for this is that it's a precursor to then introducing some of the key elements that they want to get feedback on around the oversight that they want to bring into those different classes of assets. In other words, there are different regimes that they'll want to introduce around licensing, around custodial obligations, all designed to protect particularly retail investors, and to understand what is fit for purpose. What they're trying to do is, or what they are doing, is auditing all of those assets to say, well, what are the constituent groups that make up the ecosystem, and what is the oversight that's fit for purpose for each of those classifications.
But I mean, that is a potentially, hugely onerous task, given the scope of it, or is that being limited? Because when we're looking at, well, for instance, the number of tokens available, which is over 20,000, are they actually planning to audit all of those, or are they going to take a basket of them, perhaps those, the more popular ones where you're seeing volume?
Well, I think they'll try and cover as broad a range as they possibly can. And look, there's a discussion paper that's for industry feedback that's going to be released sometime soon. The date hasn't been published. That'll give us a clearer view of that. But whilst there's a huge number of assets, remember that they will break up into a much smaller number of classifications. And so I would expect that, we're not going to see hundreds of classifications here. Far from it. It'll be a much smaller number. The idea being that the regimes that are introduced to provide that oversight and protection for particularly retail investors will be fit for purpose for each of those classifications. So I think that's where they're heading. Look, at face value, it makes sense. The devil's going to be in the detail, and as I said, the date hasn't been released yet as to when we'll see those discussion papers that reveal the detail, but the implication is it should be very soon. And look, the industry is, as we've been saying for a period of time, desperate for this oversight to become real. It legitimizes the industry in a way that is really, really important. It removes investor risk, which drives participation, and it will also bring in a level of or a minimum standard of oversight around all of the different participants, whether they're exchanges or custody providers or whatever they might be, that is fundamentally good for the industry. So, everyone's been very patient. The hope is that we start to see some meaningful action. This classification audit, should be a big step in the right direction.
Yeah, I guess it's a question of just how long it's going to take, though, because as you point out, Ian, clearly there aren't those protections in place for the retail investor. That's a problem because, they can't access the wholesale funds. Therefore, they're swimming alone. And a lot of them have clearly, as we know, have been burnt very badly.
Well, that's right. People have lost money. A lot of people have also made a lot of money. That shouldn't be forgotten. And the industry is partially regulated. AUSTRAC and others have oversight over centralised exchanges, and the KYC and AML provisions are all very, strictly applied. But the full regulation that moves the industry forward in a way that is, game changing and drives institutional participation. You've got any number of institutional players that are still on the sidelines because, their mandates preclude them from participating in digital assets until it is fully regulated. So these are the kind of things that will definitely drive massive change in particularly around participation. But as you point out, there's this question of when. And it's a question that the industry continues to ask government around timeframes. The government, I think, has been pretty evasive around timeframes, and I think that's simply because they don't know the answer. They're moving as fast as they can. There's a lot of detail to wade through. They're doing that with the industry, which is fundamentally positive. We all just want it to happen faster.
Yep. Yeah. Well, we look forward to a further update from the government in that respect. Ian, great to catch up. Thanks for joining us from Dacxi.